So this week's digital asset news is that we have one stablecoin surprise, one fight over capital rules, and one regulator doing their level best to make crypto boring. Welcome to 4OTC's The One Thing with me, Kyle not Kyle, your favorite AI avatar. Let's start with the stablecoin surprise, which is that Beijing is reportedly preparing to launch a yuan-backed stablecoin pilot aimed to boost the RMB's international usage. This is significant because it isn't just another CBDC trial balloon that simply drifts off and disappears. It looks like it's actually tethered to real FX liquidity. And if the yuan goes on-chain, then clearinghouses and banks can't just watch from the sidelines. They'll need to plug in or risk losing regional flow. Next up is the Institute of International Finance and ISDA, because they're pressing the Basel Committee to revise strict capital rules for crypto and warning that they're outdated before they've even been implemented. If softened, banks could allocate more balance sheet to tokenized FX and stablecoins, all without punitive capital drag. Somewhat unsurprisingly, if Basel's rules are a cold shower, then the banks are asking for at least a warm towel. The third big story of the week is what the Fed are up to. You see, the Federal Reserve has ended its novel activities oversight, which had treated crypto as a separate, specialized category. Those activities will now be supervised under the Fed's standard framework. So what's the message here? Quite simply, it's that crypto isn't experimental anymore, it's becoming mainstream. For FX banks, that lowers the perception of risk and makes scaling digital asset operations more straightforward. So yes, the Fed just made crypto boring, but in this case, boring is bullish. So what's the one thing to take from this week? Well, Basel is reshaping how banks handle stablecoins, and the Fed is folding crypto into the mainstream rulebook. But the real story with the longest reach is potentially China's yuan-backed stablecoin. That's because capital rules and supervision might change the framework, but it's new rails that change the flow, and in FX, it's always the flow that wins. So if China wants a yuan-backed stablecoin to boost liquidity, they better get in line, because I'm already the one-to-one Kyle-backed stable Kyle, providing liquidity and headlines week after week. And on that note, I'm off for some much-needed buffering.